Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, December 23, 2024. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Let's harken back to late last week. What's a good place to start? How about going back to Thursday's video? If you remember what was said, this might be a little refresher. We were looking for a turn. That was in Thursday night's video. Now, what I said then was, I'm looking for a Friday flush and a turn into this week, Christmas week. We had the flush on Friday. We had a morning flush and reversal at the number we talked about. How do you like them apples? Why don't we start there today? The turn had volume behind it, and today we had what's called follow through in the trading parlance. What was also said last Thursday was that this week is typically, not every time, and there's been plenty of times where it wasn't, but when you talk about majority, this week is quiet. This week has low participation and tends to be a floater type of tape, hence why I was looking for a turn beginning last Thursday's night. How you doing? We had participation in the Friday morning flush and recovery. How so? People had the numbers inside the numbers. The numbers posted on the board Friday morning were Friday fresh, and 582.60 was the number one support number on the board. Once again, how you doing? How do you like them apples? Who wants to get their hands on the magic calculator? It's going to be for sale within days. You can sign up for it. You can knock yourself out. There'll be a video on how to use it. There are multiple ways to use it. The magic calculator is an invaluable tool / service. I've been using it for a lot of years. I've now come to the place in my life where I'm going to start offering it to other traders. This has been one of my big secrets. What else are we looking for this week? Well, barring a collapse, and that can obviously happen, but we're going to use 590. I would put that one on a sticky note. 590 as an area which is also known as a gateway for lower prices. We don't really want the market getting below, staying below, closing candles below hourly, 2 hour, half a day, and then a daily close below 590. That would be in the bearish camp. They would begin putting in a bearish, flaggish situation. Stay above 590 and even have some follow through, and they'll start climbing their way up. This particular big time breakdown candle up in this area here. How about a little intermission? Let's talk about crude oil for a moment. See this low down here around 68.70? How do you think that works? Where does that come from? Right here, list of markets we cover. CL, support number 1, 68.70. How you doing? About silver futures. These numbers were up on the board. This one's from last week. This one's from today. This was resistance / target. The other one was support last week. Check the numbers. Double check the work. What about inside the numbers? Did anybody make any money today? The answer is yes, they did. We caught pretty much the morning low. So by the way, a little housekeeping. We're going to take some vacation. We're going to be closed Tuesday, which is Christmas Eve. Wednesday is Christmas. We're going to be closed Thursday and Friday except for the MSF Masterclass. We're going to have a live session Thursday afternoon, a Q&A while the market's open. That's a great opportunity. Other than that, we're taking the liberty of taking some holiday vacation time, some needed holiday vacation time. Now, the overnight crew, they didn't do much. They were up a little bit, down a little bit. We'll start the day with the early pivot coming in at 591.80. Right of the vertical is today's activity, and you can see here, first candle of the day, they come within a penny or two, sell off a little bit, rally back later, and we'll get into more of this in a little while. They caught a bid, and we were on top of it for low of day. We were also talking about, did we catch low of day? And here's what would happen in the afternoon if we catch a Friday floater. They're going to at least get back to the pivot. They did that. This was discussed in the live trading room this morning. By the way, let's have some fun with this one. Above the pivot, and this is many points away, above the pivot, and she's poised to try and rally up to 594.80 and or higher. That would be target-ish. Guess what? There's your target-ish, 594.80. Once again, how you doing? I would pause the video, read the notes, go back to the chart, and double-check the work. What's the scoop today? They're leaking a little. 587 is the nearest support number on the board. They don't have to get there, but can in a continued dripping situation. Let's scroll up a little bit and see what we have. Again, read the notes. Here's 945. 589.47 is the gateway to lower stuff. Again, 587 is the lower stuff. However, by 10:09, no change. It's slow. Watching turtles watch paint dry kind of day, kind of session. Not surprising for a Monday before Christmas Eve. Now, 588 to 587 is now a support zone for a bounce back in the other direction. Reading the tape about down here at 588, spiked it, ripped it back up in the other direction. We had plenty of participation and we had plenty of trailers on because they never even retested it. Makes for a risk-free, emotionless trade. Write that down. Put it on a sticky note. Once again, pause the video, read the notes, go back to the chart, double check the work. It's all in here. Everything you need to be successful trading in the S&P each and every day. Whether it's options, futures, exchange-traded products, it makes no difference. How about ARM Holdings, the only stock on the move today on the board? Let's go check out the chart of ARM. First entry, 125. 122.85 was entry number 2. There's your ARM Holdings. They never got to the second number. They spiked 125, bounced back in the other direction, gave you the deal. They gave you well more than $3 on the trade. 128.50, 128.60 something was the high. Nice trade. This is all from inside the numbers. Give you the markets. We cover a dozen markets, stocks on the move, and the intraday and pre-market commentary about the S&P and what's going on. This is a fantastic service. Write that down. Put it on a sticky note. Now, what's going on over in Camp IWM? We don't have the same exact look as the spiders. They didn't get down to my ideal place. Is this a fake out operation? They are below the 20, 50, and 100 period moving averages. They were down today. Leading indicator, my favorite market leading indicator, down 50 cents or 0.25%. We're not going to give it the federal case deal. We're not going to make a federal case out of it, but we are watching closely the IWM for clues. Right now, they're stuck down here and they're nowhere near out of the woods. Could certainly have another leg down, and if they do, you can bet your bottom dollar that the other markets are following suit. But when you look over at the transports, which is my second favorite market leading indicator, a number one canary in the coal mine, they did get to an important number. We talked about 15,730. They bounced off the number. So we're watching this one closely. Second favorite market leading indicator, a number one canary in the coal mine. From a weekly chart perspective, you can see they came into, spiked, and closed above the 50-week moving average, which they haven't visited since back here in September, early September. So that does have meaning. It is meaningful. We'll see if the markets can catch some kind of a bid during Christmas week. No guarantees, just part of the mapped out plan from late last week. What about the Q people? Similar to the spiders, we had a follow-through type of situation. Reversal day last week on Friday, flush and recovery, some follow-through. They're going to start working as long as they can stay above all the moving averages. Trend is your friend. They can stay above the 20. They'll start working their way back up the big-time breakdown candle. No guarantees they can get to the top, But what they will do is give an attempt, the college try, to work their way back up the breakdown candle. When you look at the weekly chart, they're comfortably above all the moving averages. Trend is your friend. 515.58 was the most recent breakout area they already ran a test of and bounced off of it. The next one in the sequence is 503.50. Back to the daily chart so you can get a visual on just where 503.50 is from a daily chart perspective. They don't have to get there, but that eventually will get visited on the next leg down. They don't have to do it tomorrow. They don't have to do it this week or next week. We're just identifying where the important places are. Above all the moving averages, repeat after me, the trend is your friend until she throws your shit out the window. XLF, we knew about 49.90 well in advance. Once they broke below 49.90, they couldn't recover. They tried 3 or 4 times, and that was all she wrote. The next number down in the sequence is really 46.70, which is a gap. It's really a spike of the gap. But what you could see they did here already is came down to retest or to run a test of the most recent breakout area. Now, if they don't build a bearish pattern and take off, they will be building energy for another leg lower to fill this gap and or lower. That gap also coincides with the vicinity/neighborhood of a big-time weekly candle, breakup candle low, where they love to run tests in the neighborhood. Food for thought. Put this on your chart. Put it on a sticky note. Write it down. What about the SMH, Philadelphia Semiconductor Index? It's a tremendous proxy for the Q space or the tech space, if you will. Big time pop today, $6.50, up 2.68%. They dropped below the lower portion of this triangle, the trend line, popped right back above it the day after, and here they are still inside. Once they get to the apex, time is up. When time is up, they will either break to the upside or she will break to the downside. One way or the other, when time is up, time is up. Time will be up about mid to the latter part of January. From a daily chart perspective, narrowing things down, if you didn't have those trend lines, you would say, hey, above all the moving averages, trend is my friend. Big time breakdown candle. If they can eclipse the high, which would put them at the top side of the trend line, if they can eclipse the high and close candles above that high, that is absolutely the bull case for higher prices. That would bring them up to 259, 260 pretty quickly. Write that down. Put it on a sticky note. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. Wishing everybody a very Merry Christmas. We're pulling the ripcord here today, and a Happy Hanukkah, by the way. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.